Welcome to Capital Market Lecture Series. Today we are going to discuss about the Securities and Exchange Board of India. Securities and Exchange Board of India is the highest regulatory body with regard to the functioning of security market, stock exchanges and commodity markets. And Exchange Board of India, SEBI, is the regulator of capital market in India. It is owned by Government of India. It was established on 12th April 1988 as a non-statutory body and was given statutory powers on 30 January 1992 through SEBI Act 1992. That is, Securities Exchange Board of India was established on 12th April 1988. At that time, it was a non-statutory body and it was established on the recommendation of G.S. Patel Committee. And SEBI was given statutory power in 1992 through SEBI Act 1992. And this statutory power gives comprehensive powers and supervision of capital market to Securities and Exchange Board of India. It functions under the Ministry of Finance, and statutory powers with regard to the regulation of securities and commodity market in India is now vested with the SEBI. Its headquarters is at Mumbai. It has regional offices at Calcutta, Ahmedabad, New Delhi and Chennai. It also has local offices in almost all major cities of the country. The organizational structure of SEBI is given in this slide. It has 9 members. Chairman is at the top of the organizational structure. And among the 9 members, 2 members will be representing the Finance Ministry, Government of India, 1 member, Reserve Bank of India, the members also. Out of these 5 members, 3 members will be whole-time members and they also represents the Union Government of India. List of chairmen of SEBI is given in this slide. The first chairman of SEBI was S.A. Dave. He assumed charge on 12th April 1988, that is on the day of its establishment itself. The present chairman is the Ajay Tyagi. He was the chairman from 10th February 2017 onwards. Given the committee's function under SEBI are given here. It has Technical Advisory Committee, Committee for Review of Structure of Infrastructure Institutions, Advisory Committee for SEBI, for Investor Protection and Education Fund, Takeover Regulation Advisory Committee, Primary Market Advisory Committee, Secondary Market Advisory Committee, Mutual Fund Advisory Committee, Corporate Bond and Securitization Advisory Committee. These are some of the committees that are functioning under Securities Exchange Board of India. Important departments that are functioning under SEBI are given here. They are Commodity Derivative Market Regulation Department, CDMRD, Corporation Finance Department, CFD, Department of Economics and Policy Analysis, DEPA, Department of Debt and Hybrid Securities, DDHS, Enforcement Department 1, EFD1, Enforcement Department 2, EFD2, Inquiries and Adjudication Department, EAD, General Service Department, GSD, Human Resource Department, HRDM, Information Technology Department, Integrated Surveillance Department, Investigation Department, Investment Management Department, Legal Affairs Department, Market Intermediaries Regulation and Supervision Department, Market Regulation Department, Office of International Affairs, Office of Investor Assistance and Education, Office of the Chairman and regional offices. These are the 20 departments that are functioning under the SEBI. Tribunal that is functioning under the SEBI, it is known as Securities Appellate Tribunal. Its major objective is to safeguard the interest of the investors. Powers of the SEBI can be classified into three. They are quasi-judicial, quasi-legislative and quasi-executive. Whereas quasi-judicial powers include SEBI can conduct hearings and pass ruling judgments in case of unethical and fraudulent trade practices. This is to ensure transparency, fairness, accountability and reliability on the capital. As a quasi-judicial power for conducting hearing and for passing judgment in case of unethical and fraudulent trade practices. SEBI has a quasi-legislative power also. It allows SEBI to draft rules and regulations for the protection of the interest of investors. There exist so many examples for the regulations, and the SEBI can draft rules and regulations for protecting the interest of the investors, that is they are quasi legislative. SEBI LODR, SEBI LODR, that is listing obligation disclosure requirements, is an example for the legislative quasi legislative powers of the SEBI. It aims at consolidating and streamlining the provisions of existing listing agreements for several segments of the financial markets like equity shares. This is to protect the interest of the investors from the malpractices and fraudulent trading. That is, the SEBI has quasi-judicial, quasi-legislative. Quasi-judicial means for conducting hearing and passing judgment regarding the problems of the fraudulent activities of the investors. Quasi-legislative power means they can draft rules and regulations. And third powers of SEBI is that they have quasi-executive powers also. They are authorized to file a case against anyone who violates its rule and regulations. It is empowered to inspect account books and other documents. That is, the SEBI has a quasi-executive power, that is to file case against anyone who violates its rules and regulations. It is empowered to inspect account books and other documents if any suspicious activities are found. Major objectives of Securities and Exchange Board of India are facilitate the growth and development of capital market. This is the first objective, that is facilitate growth and development of capital market. Second one, to ensure the interest of the investors, that is to protect the interest of investors. Then third one, attract steady flow of saving, that is to make a steady flow of savings, regulate security market, ensure fair practices, promote efficient services. These are some of the important objectives of SEBI. That is, major objectives of the SEBI are to facilitate the growth and development of capital market, protect the interest of investors, attract steady flow of saving, regulate the security market, ensure fair practices, promote efficient services for the brokers, merchants, intermediaries, etc. Major responsibilities of SEBI are protect the interest of investors in the securities market, to promote the development of securities market, that is the development of securities market in India, regulate the business in stock exchange and any other securities market. Fourth one is register and regulate the working of stock brokers, sub-brokers, share transfer agents, bankers, issue, trustees of trustee, the registered to an issue, merchant bankers, underwriters, portfolio managers, investment advisors, and etc. That is, they SEBI register and regulates the working of these groups of or these categories of the peoples who are dealing with the capital market. Then another one is register and regulate the working of depositories, participants, custodians of securities, foreign institutional investors, credit rating agencies, etc. That is, they also regulates and register the working of various participants, custodians for institutional investors also. Then another responsibility is to register and regulate the working of venture capital fund and collective investment schemes including mutual funds. That is, they control and registers the venture capital funds, collective investment schemes and mutual funds. Another responsibility is to promote and regulate self-regulatory organization. That is promotion and regulation of so many self-regulating organizations that are functioning under the capital market. Prohibit the fraudulent and unfair trade practices relating to securities market is another important responsibility of SEBI. That is, safeguard in order to safeguard the interest of the investors, fraudulent and unfair trade practices are to be prohibited. And another responsibility is promote investors education, provide training of intermediaries of securities market, provision of training and education to the investors as well as to the intermediate. Another responsibility is prohibit insider trading in securities. Trade by the members of the organizations of SEBI is to be prohibited. This is to prohibit the fraudulent activities by the members of the Securities Exchange Board of India. Then another responsibility is to regulate substantial acquisition of shares and takeover of companies. That's it. Substantial acquisition of shares and a takeover of the companies has to be regulated. Then another important responsibility is to conduct research for efficient working and development of securities market. That is, these are some of the important responsibilities of Securities Exchange Board of India. That is, protect the interest of the investors, development of securities market, then regulate the securities market, regulate the business and regulate and register the working of stockbrokers, sub-brokers, portfolio managers, depositories, participants, venture capital funds, collective investment schemes, mutual funds, etc. Promote and regulate self-regulatory organizations, prohibit fraudulent and unfair trade practices, promote investors' education and trading, prohibit insider trading, regulate substantial acquisition of the shares and conduct research. These are the responsibilities of SEBI. We want to see what are the functions of Securities Exchange Board of India. In the preamble of Securities and Exchange Board of India, it is described that the basic function of the Securities and Exchange Board of India is to protect the interest of investors in securities and to promote the development of and to regulate the securities market and for matters connected therewith or incidental thereto. Therefore, important functions of SEBI can be categorized as protective functions, then second one promotional functions or development functions, and third one as regulatory functions. These are the important functions of Securities Exchange Board of India, or we can broadly classify the functions of Securities Exchange Board of India as protective function, development functions, and regulatory functions. Some of the important protective functions include prevent price rigging, second one prohibit insider trading, third one financial education for investors, and intermediaries and SEBI guidelines. First one is prevent price rigging. We know that capital market is a highly fluctuating market. There exist so many theories to evaluate the fluctuations that exist in the capital market. These fluctuations are natural also, but sometimes some sudden fluctuations are fixed by the existing group of the corporates. This will lead to huge losses to the investors and traders. These are fixed by the corporates, and these fixed fluctuations are called price rigging, price fixing, or collusions. SEBI keep strict surveillances to prevent such price rigging by introduction of circuit or some other or by the introduction of so many other measures. Has created a threshold the limits beyond which it cannot fluctuates. It is based on the previous day closing price. If a security price goes beyond this defined circuit, a circuit breaker comes into action and trading on that security is halted for sometimes or for the whole day. This is the way through which this price rigging or fixed fluctuations by the corporates are prohibited. That is one of the important function of SEBI is prevent such price rigging. That is, price rigging is the fixed fluctuations created by the corporations, by the corporates. Second one is prohibit insider trading. That is, insider trading means company stock price fluctuations is highly affected by public news and announcements. Any forthcoming public news and announcement is already accessible to some persons in the company. They can take advantage of that announcement, and trading on the basis of such announcements by the members inside the company are known as insider trading. To prevent that, this may sometimes create huge losses to the investors, and in order to prevent insider trading, SEBI has barred trust of listed companies and employees welfare schemes from purchasing their own shares from the secondary market, and there will be close monitoring of the members of or the employees of the company by the SEBI for controlling or prohibiting insider trading. This insider trading is to make advantage of the situations that is prevailing in an economy by the members of the or by the employees of the company itself, and this may sometimes create huge losses, and this active or these types of activities are usually prohibited by the SEBI. Third important protective function is financial education for the investors. SEBI usually conduct various online and offline seminars and other measures for educating the traders and investors. Then another protective function is guidelines. There are several other unfair practices which can be used by the corporates and others for manipulating security market. And in order to prohibit such activities or unfair practices, SEBI creates guidelines from time to time. Second category of functions are development functions. That is, development functions are promotional functions, and it includes promoting investors' education, promotion of research and publications, promotion of self-regulatory organizations, promotion of training of intermediaries, introduction of electronic platform financial market, demand form of securities, then introduction of discount brokerage, buy sell mutual fund directly, buy and sell mutual funds directly from the AMC. Then underwriting to reduce the cost of issue. IPO is permitted through the exchange. Third category of functions are regulatory functions. It regulates the activities the stock exchanges and any other securities market. Second one is regulate the functioning of share brokers, merchant bankers, portfolio managers. Regulate or prohibit fraudulent and unfair trade practices in the market. Register and regulate working of collective investment schemes including mutual funds. Design guidelines and code of conduct that are enforced to financial intermediaries and corporates. It registers all the intermediaries, share transfer agents, trustees, and all those who are associated with stock exchanges. It regulates takeover of companies. It conducts inquiries and audit of exchanges. These are the regulatory functions performed by the SEBI. Critical evaluation of A critical evaluation of SEBI is given here. First one is large number of rules. There are large number of rules prescribed by. These have also been enhancing from time to time. This has created a high level of uncertainty and confusions. Second one is less protection to small investors. SEBI is not really serious about reforming the systems and protecting the individual and small investors. Third important criticism against the SEBI is the claim on high success rate. That is, they usually project their success rate. Another criticism is that insufficient powers. SEBI has often complained of having insufficient authority and powers. It should become more effective, efficient, socially accountable, and small investor friendly. Its working is quite good. The powers these companies are very limited. Yes, regulatory ineffectiveness of in certain areas. This also has to be controlled.